Let's get across more on that. Scott Gecas from Longleaf Trading Group is joining us live from the CME in Chicago. Scott, great to have you with us. I think initially there was some fear of these geopolitical risks resurfacing, but perhaps that is now eased. What are you making perhaps of what's going on and the rise in particular that we're watching for the oil price today?
Yeah, the soap opera continues, especially with the oil prices. You know, the tariffs coming out, sparking a trade war. You know, but he also did come out. The U.S. president came out this morning and said, well, if they get favorable results out of NAFTA, he might scale back on the tariffs. So we're going to see how that actually plays out. You know, one of the things that is really coming to light right now is with Russia and Saudi Arabia, you know, coming into an alliance, you know, cutting production there, you know, that Russia is the #1 producing oil country. U.S. is right behind it. You know, that's a strategic advantage that they are putting into place that just came out within the last few hours here. So we're going to see how that is going to play out, but that is definitely spiking prices for oil. You know, if we can test that 64 mark or close above it, it's going to be off to the races. You're going to see a lot of fresh buying coming in. We could test contract highs all the way up to 67 just on that news alone.
You mentioned there the trade war, and obviously that has dominated the market moves and the discussion recently. There's still, I guess, investors waiting to see whether the US will flinch, and if not, what responses will follow from the rest of the world. I mean, Donald Trump seems to be sticking to his guns right now. We haven't seen retaliation as yet, but a lot of concern about this trade war, particularly between the US and China. If there was a trade war sparked here, what would it mean for the oil market?
Well, it would be higher prices. You know, where everyone was waiting for a big retaliation from China with these trade wars. You know, the first thing everyone was expecting is they were going in for the agricultural market. But as today, you've seen they just imported some fresh new soybeans. So that hasn't hit the market yet. So that's why you've seen the soybeans prices spike a little bit earlier today. But that still has a continuation carrying over to the oil market as well.
Now, last week, I know we saw pretty heavy losses. I think the oil price was down about 3.6%. A surprising rise in those US inventories was really one of the factors for that poor weekly performance. So again, it's this ongoing story. While OPEC is obviously cutting production to spur on, I guess, a rebound in those oil prices, we are continuing to see growth in shale production in the US, really threatening the rally. And again, that's an ongoing story that we continue to talk about.
Yeah, you know, the U.S. ramping up production. You know, one of the things that are coming out as well is the weather out east that is tightening supplies. So that's another reason why you're seeing a big spike in oil today.